Knight Capital is a hedge fund. Sorry. Knight Capital was a hedge fund. And then now that's changed to autonomous algorithms running at sub-millisecond speeds, executing trades and creaming off fractions of a percent of a cent, but thousands and thousands of times a second. So Knight Capital had, in the sort of early days of electronic trading, people set up servers like right next door. They would hire very expensive office space next door to the New York Stock Exchange so that they could literally run fiber optic cables through the wall straight into the trading computers. And so Knight Capital had to rework their software to run inside this new system. And they only had 6 weeks to do it. And so they did this. And at 9 o'clock in the morning, on the first day that this went live, they deployed their software onto 8 of the servers. And in the first 30 minutes, it spent $800 million on trades. And they went, oh no, something's gone terribly wrong. And so they looked and they went, oh, the software didn't roll out properly. It only went onto 7 of the machines. The 8th machine was the only one that had the right software. And by the time they just turned the machines off at midday that day, Knight Capital, by 5 o'clock that afternoon, had to pay $4.5 billion in trades, which they didn't have. And so they were acquired by Goldman Sachs and then disappeared 6 months later. But $4.5 billion was what did for Knight Capital.